I'd like to finish on the introductory session there with Sean.
Well, since we're talking about the economy, then by definition we're talking about markets. Markets involve competition, which is a good thing, but I think it's important to understand the landscape for competition. So in that context, let me dwell for just a moment about the elephant in the room, which is China. So despite China's refusal to agree to emissions targets here last year, and notwithstanding what we heard a couple of times this morning about the fact that China's building about one coal-fired plant per week, it would be a mistake to think that China isn't extremely active and committed to this area, because it's investing and it's producing, and it's doing so in a way only China can do these days, which is on a very large and a rapid scale. So there are three drivers behind it. One is environmental. So much of China is an environmental disaster, which has political consequences for the government there. Second is energy security. They once were an oil exporter, now they're an importer, and of course they're trying to acquire resources around the world because they are so concerned about their natural resource pipeline, including oil and gas. And the third motivation is economic, which is to build a globally competitive renewable energy sector. And climate is a factor also, but I would say climate is the least important factor for the Chinese among all of those. And so what we're talking here, which is very appropriate to an economic conversation, is that from the Chinese standpoint, this isn't a moral issue. It's not climate change. It's an economic issue, and it's a security issue. And with that, they are pursuing very, very strong policies, which will likely get stronger, and they're investing very, very heavily in a way that no other economy so far really has invested. The U.S. maybe, but really not as much as China. So some of their laws, so they have a clean energy standard, aiming to get 20% of primary power from non-fossil fuel by 2020. It's about 9% today. They've invested since 2007 upwards of $10 billion just in energy efficiency. That's on top of 8 to 14 billion of non-government funds invested. That's pretty big. They're already the world's leading producer, manufacturer of PV panels. They account for about 30% of all global production. Most of that, by the way, is currently exported. They have very, very generous subsidies for large-scale rooftop solar. They'll pay 50% of the cost of utility-scale solar projects. They've got feed-in tariffs now for wind. Basically, the utilities have to buy all the renewable power that's generated, period. Their wind generation capacity has grown exponentially, pretty much doubling every year since 2006. They just passed Spain to become the world's third largest market in terms of installed capacity. They're growing their production capacity for lithium batteries. Their stimulus, the global recession, they put about $3 billion into electrical vehicles. A couple of weeks ago, they announced which only the Chinese government can do, a consortium of leading state-owned enterprises, including the major oil companies, 2 grid operators, 2 automobile companies, with $14 billion targeted on investment just by 2012. That'll include standards, fuel cells, and charging stations. Big investment. We can see the impact already of this globally, so we're looking outside China now. So Suntech will probably very, very soon overtake Q-cells from Germany as the world's largest maker of solar panels. Almost all German, or most German PV panels are already made in China. Vestas from here, of course, Applied Materials, many of our big California companies are already investing there in the China market. And so we look at the global markets, the export markets. So we've got a massive and growing global export market for these technologies. It pretty much doubled from 2004 to 2008, upwards of $200 billion and growing. Germany is still the leader, but China's number 2. Then Japan and the US follow. And I guess what the point I'm trying to make is it's not all about China. We heard this morning about things that are happening, very, very positive things in policy and industry in Korea. Vestas is the world leader in its industry. Suzlon, in wind power in India, extremely powerful. Then you have, of course, the service and other technology companies we've heard from today, Siemens, Philips, GE, and others. So it's not just about China, but I think because of its market scale, the unique capacity of the Chinese government to invest and direct this coincidence of policy and investment, and to do it very quickly, that China really, because of its climate impacts and because of its production capacity and its potential market scale within China as an export destination, is really going to be looming very, very, very large. I think for all of us, whether it's as a competitor or whether it's as a market. So I think that leads us to a couple of points just to think about as we're thinking about global markets and growing global markets. That again, what's powering China is policy, pragmatic policy. It's the desire, among other things, to create an industry, and they're doing it. They're very, very strong in production. But it's a combination of policy and investment. And so I think for all of our economies, we need to be thinking the same way. It's this sustained policies that are helping to, at least for the near to medium term, support and create a market. It's the need for capital, which we just touched on earlier. You've got to get the private equity, the venture investment to get these technologies commercialized and produced at scale. And it takes the leadership from the government with industry to make those things happen. So I think we need to be very practical about this. I think part of the purpose of this conference is to shift the conversation a bit from climate change to the economy. And when we think about that, we need to be very practical about the markets, the relations, the markets to investment and to policy, and to be aware of just the size of the market and the competitive scale we're seeing coming out of China right now that's only going to grow.
Great, thank you. And obviously a lot there on China in terms of their momentum they've created. Before I open that particular issue up to the rest of the panel from the European perspective, you did mention the economic opportunities. So